you struggling to find Autoblocks? Do you even know what an Autoblock is? Well, in this video, I'm going to show you step by step how to find an Autoblock, what an Autoblock is, and the two types of Autoblocks are, so you can avoid the losses and get more wins. Well, my name is Pedro, and I help Forex traders how to become profitable traders without sacrificing time and the overwhelm. So let's jump into the charts, and I have something special here for you. If you're new to the channel, please hit the subscribe button and give me some likes, and let's get into. Right, so we're gonna come back here to the charts in just a few minutes, but let's understand, let's have a better understanding how to find an Autoblock and what an Autoblock actually is, okay? So what is an Autoblock? Okay, an Autoblock is like basically special zones, okay, of support and resistance that are used by the banks, by the large trading institutions like the hedge funds, right? They split big orders, okay? You have to understand, when they are in a market, they're not in a market to getting a few pips. They are putting in millions, if not billions of dollars to move the market. So number one, you have to understand that the banks manipulate the market and they create traps. So by understanding, right, which I'll show you in just a few minutes, how to find them in the chart, Autoblocks, you can predictably, right, see where the banks are taking the market and how there's a retracement to come back right to where before they move the market, right? And how you can basically ride the coattails. And we used a very specific strategy called the banker strategy that I use, have more wins in trades than losses, right? And at the end of the day, to grow your account. Now, if you want to learn more about that strategy, click somewhere description of this video, the bankers strategy, and then you're gonna check your Facebook Messenger, because I'll deliver that to you in there. Now, so let's get here into the content. So there are, an Autoblock is special zones, again, support and resistance, or they also known for supply and demand, which we'll cover that, right? It's used by the banks. They split their orders in small chunks, right? They divide their millions of dollars, they move the market, and then they have to move it again to get their orders, right? To fill their orders, so then they're not in drawdown. This is important, without disturbing the market. And these Autoblocks are known by supply and demand. So think of demand as simple. We live in a times that the inflation is crazy. And what does that mean, right? Demand means that there is more of a need, right? That there is more of a need. People are looking for something, right? So if the people are looking for something, the price goes up. So this demand, right, in this particular area zone, there's accumulation of orders of money, liquidity, you know. And by the way, I do have a video that explains what liquidity is and how to find it. Okay, put the video somewhere, you know, on the description here, so you can find out what liquidity is and how to find it. And then when the banks see there's a lot of liquidity there, basically money that they can grab, right? They split their orders and then they move the market. All right, so, and then supply is the opposite, is that there's less demand, and then there is much easier actually for the banks to move the market. And also these zones can be seen as support and resistance, which the banks know that the retail traders, right, use support and the resistance to trade. And what happens is that they create fake outs, they create traps, and they pretend to move the market one way, and then they go the other way. And I'll show you in a chart in just a minute. So there are two types of Autoblocks. There's a bullish Autoblock, which is, I'll show you exactly in a chart exactly what this, where to find this. So if you stick with me until the end, a bearish bar is a candle formed before the up move, okay, that takes place in the market. Basically, it breaks structure and it creates a lower low or a lower high, okay? And there's a bearish Autoblock, which is, it's the opposite. It's a bullish bar that is formed before the down move. And this is where the bank's creating traps, okay? If you don't understand smart money concepts, this is where you get trapped. You think you may put the stop loss here, but they move the market higher, they stop you out, and then they go in the direction that you initially thought was going, but they actually stopped you out. So you probably thought, oh man, I just needed to increase my stop loss, but it really wasn't stop loss. They create these traps, and if you don't understand them, you're going to have more losses than wins, right? So and then basically breaking structure, lower low or lower high. All right, so let's jump into the chart. I'm going to explain this to you. So we talked about right here that an order block is special zones of support and resistance, right? As I see here, this is a special zone, and these special zones are typically this is created on purpose. Nothing that the banks do is on occasion, right? This is all on purpose. And so this one here, if you see, there's another, and this is basically accumulation, okay, that the banks are creating. They're creating liquidity. Again, there's going to be a video in the description that talks about liquidity and how to find it, okay, so you can understand what liquidity is. So there's this accumulation here, and this is seen, could be seen as support and resistance, right? And what happens is money, right, the banks are moving the market, or the market is moving, and the banks are creating, right, small splits, right? They're splitting their money in small chunks, right? And here's the perfect example. Okay, let me just erase this. Here's the perfect example. Right? The banks took liquidity over here, and they also took liquidity here. If you look, they took this one. The banks moved the market down, and then they moved the market up. So if you had stop order, if you bought here, I mean, if you sold here, but you had stop losses here. See, the banks with this wick took your money out, all right, and then they move the market downward, right? The oppositely. So here's order block is a bullish bar candle that is formed before the down move. Okay, here it is. There's bullish. If you move this to a 4-hour, right, you're gonna see a bullish. See right here. So the market. So it all depends, again, the time frame that you're looking at. That's why one of the problems that most retail traders do is they only take a look at one time frame. It's very important you to on a smaller time frame or open your horizon and take a look at the big picture, right? So as you saw here, the market moved in there was a bullish candle, and then followed by a bearish. This is a bearish order block, right here. As you see here, the market came down. Now watch this. Let's go back to the daily. All right, here it is. Look, they moved the market down, and now watch for this candle, right? Watch for this candle right here. I think it's that one. Because what happens is they move the market down, and they have to come and get their orders because they're in drawdown. Look at that. Look at that. So we call this our banker's candle because it's bearish block, right? There's a nut move, right? It's a buy candle, right? And if we go into the 4 hours, I already show that to you, right? Right here, there was a nut move before the big down move, before they took the market down, right? Right there. Right, and this would be a red candle. Now it could be a series of red candles, right? Because I'm just making it easier here, right there. And see, here is where we would get in, right? And look at the drawdown. So if you got in there, let me just erase it, right? I mean, look at. I mean, I would cover the wick, right? Let's continue. Look at that. Look at where it went. Now, what we see here, we talked about breaker structure, right? Lower low or lower high, right? And here's what happens. There is a breaker structure right here. It broke this structure. That's what that means. It broke this structure, these candles right here. And also, as we see it, it broke this structure too on a bigger picture. Now, because so it's telling us it's bearish, right? So it broke this structure. It even came down all the way down here. It broke this structure as well, right? Because if we put this line right here, say it broke this structure, right? And then it was a retracement right here, right, to this line, to this scam, to this banker scandal. And now there's, look at that, it's just like boom. Now, do you think the banks are not manipulating the market? Do you still believe that the banks don't manipulate the market exactly how they want it? Now, let me know in the comments below, what did you enjoy from this video? What was your biggest haha? All right, hit that subscribe button. Give me some thumbs up. And if you want to learn exactly how our banker strategy follows these smart money concepts, where you can identify these order blocks, how to trade them, right? So you can maximize your wins, and without the time suck and the overwhelm of learning all kinds of indicators. Because at the end of the day, if you follow the banks, you position yourself in their side, not against them. I don't know about you, but I want to be on their side because they move the market, not the small.